Be honest. Have you ever bought a personal item with your business credit card? In this video, I'm going to talk about how to identify this item in your QuickBooks, what accounts you need to focus on, and how to fix this mistake. Okay, so the purpose of this video is to identify the personal transactions that is located within your QuickBooks. So this is the new interface that QuickBooks has. We're going to go to the left navigation screen and go to the accounting tab. And then from there, you're going to scroll up to the bank transactions. That's where all the transactions flow in from your bank accounts and accounts that are connected within QuickBooks. We're going to have to build the scenario because this is a test file, so it doesn't have any real client data in it. So let's say the scenario would be you purchased a book for your son or your daughter and you didn't have any other credit card on you but the business credit card. So you purchased a book from Books by Bessie. The expense was $75. So what we're going to do is we're going to just create the scenario and say, hey, yes, I didn't have my personal card on me. Let me just swipe the business card and I'll just deal with it later. So in the memo, I'm going to put children book just so that we can identify this transaction. And we're going to put it to dues and subscriptions as the account or the expense that we want to use to identify that expense. So we hit add, and then we could kind of look at where the expense went because we categorized it. So it would be in the categorized tab. It's going to the category of dues and subscriptions. Then after that, we can either identify it through here, categorize, or we can go in the search field and type Books by Bessie, and it should come up. And there it is, 11/12/2025, 75. So another thing that I wanted you guys to look at is your chart of accounts. So I'm going to leave this tab open, or, better yet, the chart of accounts is here. So we're just going to go to the chart of accounts on the left navigation screen. Okay, so we were going off the scenario of buying a book for your child. And what we're going to do now is go to the left navigation and go to chart of accounts. And I want you guys to focus on the equity portion of the chart of accounts because these accounts track the flows of the withdrawals the owner makes as well as the investment that the owner puts in. And I've already created these two accounts for you. All you would do is just go and type in shareholder investment. The account type would be an equity account. And the detail would be paid in capital surplus. And then you would click save. I'm not going to click save because I already have it here. So we're just going to cancel. I just wanted to show you guys how to create those accounts. We're going on the scenario that this is an S Corp. So with an S Corp, you would have shareholders distribution, shareholders investments. With a partnership, you would have members distribution or members investments or contributions and so on. So I wanted to do those accounts so that I can show you that that $75 expense that you bought for your children is here sitting in distributions because we coded it to distributions. So we're going to go back to the bank feed and imagine a scenario where there is money that you put in the business, right? So let's just say money that you put in the business, or Bessie decided to give you a refund on that $75 that you purchased. So it would appear in the bank feed. This is it. We know that this is not income for the business. We know that Books by Bessie is just giving us a portion of that money that we spent, even though it was personal already. So it is a deposit that's going to go in. And what we can do is that it was an in and out, $75, but they're only giving us $55 back for the return, or whatever the reason is. We're just going off of the fly because we're trying to create the scenario. We could leave the vendor like Books by Bessie, and then this would be a shareholder's investment because it is your personal money going back into the business. So you were taking the business money out to fund that personal item. But if you're putting it back, then it's just your personal money that you're putting back into the business without getting off track. That's the simplest way that we could look at it. We'll click add and the transaction is categorized. Now, when we go back to our chart of accounts, those transactions should be in those accounts. So you see the investments is 55, the distribution is 75, right? Because that's the money that we paid for our item, our personal item, and then we got that money back because it was like a refund. So we put it in investment. I wanted to show you guys the reports that this is stemming from. So we'll go to the balance sheet and you just go to the left navigation over here to reports, and then you click standard reports. And this report is very, very important, as well as the profit and loss, is because these are the reports that you're going to give to your tax preparer, your CPA, your accountant. Let's go to the balance sheet because I want to show you where the equity section is on the balance sheet. It is normally at the bottom of the financial statement. And when you're reviewing these reports, you can look at those two accounts and see if anything seems off. If there are negatives where it's not supposed to be negatives, if there's a huge amount there in that field, that's kind of alarming and allows you to check out. We're going to condition this report to last year only because the transaction that we did was 11/15/2025, I believe. So it's not going to show up in a report that's dated for 2026. Anything from January 2026 and on would not be on this balance sheet. So I just wanted to make this video and allow you guys to be aware that this section is very, very important because this is going to determine the amount of taxes that is assessed, as well as this report right here, which is your profit and loss. The profit and loss shows the expenses and the revenues, the monies that you made within that. Now, if we didn't code it to the shareholders withdrawals, distributions, or the shareholders investment or contributions, it would show up in the profit and loss as an expense that was for dues and subscriptions. So, the big takeaway from this demonstration is to make sure that nothing personal is in QuickBooks. The IRS doesn't really like that, and it's a huge red flag. They call it commingling, and it's really not supposed to be done within your QuickBooks. I hope this video has helped you. Please like, subscribe, hit the notification button, and as always, you're keeping incredible service simple with Steph. Thanks for watching. Be blessed.